Good morning. Today is Monday, December 12th, 2022. It's Tom and I today. Hope you all had a good weekend, stayed dry, stayed warm. I think this week it might get a little bit colder, so bearing up for that. But we're going to talk about some energy news today, which I think might actually be fairly exciting. It's a pretty slow news day, so looking at the next 10 years, I think may be interesting. So, but we're going to start off with Amgen that is in talks to buy Horizon Therapeutics for a deal that would be well over $20 billion. Right now, the market cap's $22 billion, but there's been rumors flying around that Horizon would be purchased. Amgen, Sanofi, and J&J were all involved in the bidding. Sanofi and J&J both dropped out, so it looks like it's going to be Amgen. And it's probably going to be a price tag north of $25 billion. Amgen has been on a buying binge lately because it has big osteoporosis drugs, but those are going to lose patent protection in a few years. So they're trying to prime the pump with new drugs, and Horizon Therapeutics has potentially that. Basically, they're a company that treats a rare autoimmune and severe inflammatory diseases. The biggest drug is Tepezza. It's used to treat thyroid eye disease. It's really the only drug of its kind that does that, and it's an orphan drug. Mm-hmm. So to be an orphan drug, you get this special designation from the FDA, and this is where you see the crazy pricing that goes involved in it, because you have a monopoly, it's protected, and you can charge a little bit more for it because theoretically it only serves just a handful of patients in the United States. And the FDA's view of this is, well, we need to provide an incentive for these pharmaceutical companies to actually research and develop these drugs that they may only protect a handful of people, but if we don't have that profit incentive, they're not going to research these drugs. Well, what pharmaceutical companies do then is they seek out this orphan drug designation and then try to make it broader. And that's exactly what they've done with Tepezza. A 6-month course costs between $350,000 and $500,000 for 6 months. And that was a couple of years ago. So I don't even know what the pricing is today. I think they only have like 75 to 300 patients in it or something. It's crazy. And don't quote me on those numbers, but it's not a ton of patients, but it's a huge blockbuster drug. And I think it'll be $4 billion a year at some point.
It's one of those all-time drugs that they play commercials for between Jeopardy and Double Jeopardy, where I always wonder who on earth, how many people does it possibly affect? Because if you've seen the commercials, the lady goes on about her thyroid-based eye bulge, that she's afraid to take her sunglasses off because her eyes are bugging out of her head. And you always wonder, like, man, who is this for? The other one is there's the circadian rhythm backwardation blindness drug, where it's like, are you blind and you don't know what time of day it is? Commercial. They play that one a lot during Jeopardy too, which I always wonder, like, how many blind people are watching Jeopardy, but also don't know if it's day or night.
Well, it's also relatively cheap advertising for Horizon, and they do it as education. For them, it's educating the populace. So, get the tax write-off on that. And on top of that, you also spread the word, and people will then go to the doctor and say, hey, do I need this? And maybe you only hit 1 in every 10,000, but that's when you're charging $500,000 for a 6-month course. That's where it really works out. So Amgen is in talks to buy this company. Again, deal could be well over $20 billion. It's just pretty impressive that solving such a unique malady can result in so much profit. Shifting gears to still in the innovation area, the first exergonic nuclear fusion reaction took place in California over the weekend. This means that more energy was created than used in this nuclear reaction, in this nuclear fusion reaction. Now, fusion is a lot different than fission. Fusion obviously involves bringing together the atoms, and fission involves tearing apart. In fission, which is what all nuclear power is based on right now, there's a lot of nuclear waste. that's associated with that, and therefore it's just riskier, and it's resulted in this reticence on the part of many countries to actually invest in nuclear. But nuclear fusion, this is what the sun uses to produce energy, and it obviously produces a lot. It's extraordinarily clean, very sustainable. I mean, it would be a huge hit to the oil and gas industry. It would be a huge hit to solar, wind, all of this. If nuclear fusion was actually viable, there's still a long way to go. And I feel like we have this every 5 to 10 years, some big promise on nuclear fusion, and never goes anywhere. But I'm wondering if this time is a little bit different. Tom, what are your thoughts?
I mean, it's definitely something they've talked about when they use it as like the very basic example when you're learning about nuclear power when you're in, I don't know, 9th grade. That fusion is basically, you take hydrogen, oxygen, blast them together, and you get water, but also an unbelievable amount of power. And the versus fission, which is you fire plutonium at itself and it blows up, and there's radiation and nuclear waste and potential meltdowns. So it could be, it could be huge. It could be the biggest breakthrough, since sliced bread, theoretically. The question is it really coming? And we've talked a lot about, stuff like 5G, where it's like you could be in a fallout shelter bunker, and so you can still get high-speed internet, and I feel like we still haven't gotten that, but that was the promise of 8 or 9 years ago. So I'll believe when I see it. I think it's interesting. I'd love for it to happen. It would definitely make energy something that if you really want clean energy, this is really the answer, right?
This is the holy grail.
Yeah.
This would be bigger, I think, than the internal combustion engine.
Yeah. it would be absolutely huge. So let's hope that it works, and we can figure out multiple uses for it. Smaller versions, you have a car where if you, rear end somebody, you don't end up with a nuclear explosion.
Well, it also makes electric vehicles more viable if you're using nuclear power rather than clean coal.
Yeah.
To power that. So I don't know. Could be a step in the right direction. We'll have to see.
You heard it here first, folks.
Yeah, we wanted to talk about it because if it did become a story, we wanted to make sure that we were on it. Tomorrow, we have a lot going on this week, so we'll spend the rest of this call talking about that. But tomorrow is going to be the big one. So let's talk a little bit about where expectations are with the CPI print going into it. There's expected to be a little bit of a deceleration both in core and the headline. The core is expected to go down to 6.1% from 6.3%, and the headline is expected to fall to 7.3% from 7.7%. Tom, are you in line with these forecasts, or would you take the over or the under?
I'm inclined to say that we're going to come in flat on the expectation. I think that's kind of where my head is at. There was an interesting article, though, this morning in the Wall Street Journal talking about the divergence of European rates versus the U.S. rates right now in terms of futures. If you look at the interest rate curve for Europe, they're looking for between 1 and 1.5% increase in 2023. I think in the Bank of England, they're looking closer to 1.25%. And if you look at futures right now for the US, we're looking at 0.6. So they're basically estimating at this point that we're going to get these 2 rate hikes. And then in the next year, we're going to either get 2 or 3 based on futures. So there's going to be a massive change between what the rest of the world is doing and what we're doing in terms of interest rates as it stands right now, which I think is a pretty positive view. I worry that it's setting expectations too positively for inflation. I don't think we come in at 6.8 tomorrow. If we did, it would be awesome. The market would be off the races. Bonds would be through the roof. But my expectation is we're going to be right at around these numbers. I don't think we're going to see anything that blows our socks off. And if anything, as always, I think the risk is to the upside. If we come in at 7.5%, it's going to be a very bumpy ride through the rest of the week. But I just don't know where it would come from, where the big downside would come from. So my expectations is we're going to be right there on top of the number.
Yeah, you could get a little bit of decline in used vehicles. I think the health piece is going to be interesting in the medical costs. But I looked through the report from last month just to give us a little bit of framing. And I think when people see the inflation, the core inflation is up 6%. We even talked a little bit about this in the PM meeting, in our investment committee meeting last week. And I think there's just a little bit of a disconnect between how much prices are actually going up and how much the actual inflation report is. If you look at food, I just pulled a few. Cereal up 15.9%, rice up 17.1%, chicken up 14.5%, milk up 14.5%, coffee up 14.8%. Pork and beef are down, which is kind of interesting. You have eggs, Tom, up 43% year over year, 43%. Electricity up 14.1%, health insurance up 20.6%. And then they have these things like smartphones that are down 22.9%. That doesn't make any sense.
Well, I think it's because everyone's taking all the money they're spending on smartphones and funneling it into buying eggs and chicken.
Yeah.
That's where the demand's coming down, right? And we've kind of seen that play through on, Target not selling high end items, they're selling groceries.
Mm-hmm.
And I think that's what you read it. So it's a mixed bag, right? Some things are coming down aggressively, but they're mostly the things that really drive the economy, the big ticket items, and the things that would be considered staples. You got to have them to eat, live. Those things are going up. So I think that's kind of what the trade off there, and why I'm thinking flatness is maybe the key there.
Yeah, I mean, people are trying to really take a very blunt instrument in looking at how much incomes are going up and then comparing it to the inflation rate. And I think that what that undersells is the degree to which, especially at the lower incomes, you have an outsized inflation rate, especially on some of these food items and the energy items and the health items. And then on the rent versus owning a home, which are significantly different. So I think all these play a role into how people feel. And when people are saying that they're getting hurt by inflation, I mean, this is what they're talking about. Eggs up 43%. And that's a big deal. Elsewhere this week, today we have a 10-year auction. So there's going to be some more supply hitting the market. Tomorrow we have a 30-year auction and the CPI report. The way those play into each other are going to be interesting. And then Wednesday we have the FOMC meeting, which is probably going to take the cake. And then hopefully it cools down a little bit after that on Thursday and Friday. But the next 3 days are going to be extraordinarily busy. So tomorrow's call is going to be significant. Wednesday's call will be significant as well. Tom, what are you looking at?
I mean, we've got to have at least in line or under on CPI if we don't want pain in the markets heading into the weekend. And then the FOMC meeting, if CPI comes in really hot, they're going to have to say something. If they say something to the tune of, we're going to raise rates even more, or we're going to have to step it up again next time, and that could even accelerate. And then you're headed into Friday. You got Bank of England and ECB on Thursday. They're particularly hawkish. On top of that, it could really spiral out of control. And so that's why my hope is that, the fuse for this week is going to be CPI. And so that's what we really need to be watching and adjusting for it.
That's the first domino to fall.
Yeah, it's the first one. If it goes down, then everything else is probably going to be particularly negative if it's negative. If it's positive, then the opposite is true. So I'm hoping at the very least we just get in line.
Yeah, we also have a lot of data coming internationally. We have a couple of investor days, including Pfizer's today and Eli Lilly's tomorrow. Lennar, the home builder, on Wednesday reports earnings. Oracle reports tonight. Adobe on Thursday. Accenture on Friday, and then Olive Garden parent Darden on Friday. So there's a lot going on this week. We're going to be here the whole week watching it and then reporting back to you in the morning. So have a great week and let us know if you have any questions. Thanks.